right, little bit of a seesaw week last week. Did make a new all-time high on Friday, and we pulled back. So we got to talk about Monday now. And not many earnings this week. Retail earnings kicks into gear. We'll see how the consumer's doing. We'll talk a little bit about the momentum. Is the momentum waning in this market? Is the Momo coming, kind of going away? Back into value, 835. Tom Bowley, Chief Market Strategist at earnings.com. We got a jam-packed show on a Monday as usual. Let's get it started, Brent.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, it's slightly in the red, a little bit of a weak close, down 8 handles, 64, 63 and a quarter. The buck up a dime, 97.82, just consolidating near the low of the move. TLT on the rebound up 40 cents, 86.80. Oil flat, 72.77. We get a bounce here like we did in June. GLD outperforming SLV today, up a $1.10, 308.53. SLV, that's just about flat. And Bitcoin futures, well, kind of 3 down days in a row with Bitcoin. I think that's illegal. But let's get the show started on this Monday. Dennis had a busy weekend, water skiing, slaloming, eating ribs. How you doing, Dennis?
Pike.
You caught some pike?
One off the dock. Yeah, usually it's just perch off the dock, but me and the boy were out there fishing, and he wasn't doing that good, so we were trying to work the weeds a little bit there, and we got 2 little perch, and then all of a sudden, boom, oh, this one's a big one. And then I was I got a hold of it, and I was like, Spencer, set the drag on my thing. He's reaching over, setting the drag on my line, and pulled her in. It was a pretty good little fish, 22-inch pike off the dock. Not a bad little fish. It was fun.
Did you eat
Threw
it?
it back. I got to make it bigger.
Oh, really? Right.
Yeah, we're not. He wanted to keep it and clean it, and I was like, no, we got to be bigger than that. So
before we move on, do you cut them, the heads off, and gut them and do that kind of stuff?
I'm not a big cleaner. My dad always did it. Dad was always the one. My mom used to do it too. I was never a big fish cleaner. I don't like killing things. I'm not a big killer. I like catching them, but catch and release. We do a lot of catch and release.
Okay. All right. Here we are, Dennis, on a Monday. Got choppy week last week. You were trying to get your triple D sensors out there. What was going on? What was the rotation? What you come up with?
It's the same rotation. The value trade is back, folks. And it's more than just a day. It's been over a week here now. We're probably going on to 7 or 8 days of value. Probably the best thing, look at is Berk.B. That's moved up. But I mean, Warren kickstarted this with his value purchases, obviously disclosed Thursday night, traded up Friday, UNH. We know he bought a couple home builders, DHI, Nucor. The value market's hot again. It's back. The value stocks are back. Friday's action was all about value. Even you were just looking for solar, you're seeing, a lot of, and again, energy, names have been, nuclear names have been crazy. Solar's been forgotten, but, we'll get to that story in a second here because UBS with a big note on solar talking about, how Trump it's not as bad as they thought it was going to be. And obviously earnings projections are good with those credits still being there. But so this overall, the theme you can clearly see standing out. I did buy Lululemon on Thursday. That stock went up Friday, I believe. I forget who purchased Lululemon. Brentster, you're there. I'm going to say welcome Brentster in. Brentster, come on in. How was the weekend?
Good morning. Weekend was good.
Yeah.
Chill. Had a buddy's birthday party on Saturday. Went out on the boat on Friday with some friends.
Yeah, how was that?
It was nice. We went out to
Awesome.
Lake St. Clair. We were trying to debate our top. We were trying to order our favorite Great Lakes, and St. Clair was up there. It's one of the better Great Lakes out there.
You consider it a Great Lake? It is. It's a small Great Lake.
Exactly. Part of the whole thing. But Lake Michigan was the clear standout as our favorite. A bunch of Michiganders' favorite Great Lakes.
Yeah.
Lake Michigan is an ocean.
It's a monster.
No, Lake Superior.
You want to know what? Lake Superior.
Superior.
Gitchigumi, the big one. The
Yeah.
big one.
We were
That's-
watching. My daughter gets right into. I know we're going on a tangent. My daughter gets into like shipwrecks and different things. And we were looking. We had like a 2-minute video on the depths of the Great Lakes. And like Lake Erie, not considering Lake St. Clair, but of the big 5, Lake Erie is the shallowest, like 160 feet deep. You know what
Yep.
deep Superior is?
1,000.
deep. Over.
It's like
Yeah.
13 or 1,400 feet deep. I forget now because
Crazy to think
It was
about.
crazy
to think about.
crazy deep. So yeah, Evan Fitzgerald went down there. Remember?
Yeah,
That's
I've been to the
song,
ship.
1977.
And there's who wrote the song? Gordon Lightfoot.
You're right, Joel.
Yep.
You're right.
Yep.
Now, they were on their way
Yep.
to the D. They were on their way to the D, bringing steel to the D. Didn't make
They
it. It was like
would've-
the 378th trip or something. So they've done it a lot of times, but this one.
If they would have put 15 more miles behind her to Whitefish Bay, could have made it.
Then
I
they
know,
coulda
it
made
was
it, eh?
close. You can see it from the
They
Shipwreck
were.
Museum. Last tangent. I was on the Detroit River on Saturday night. We a buddy of mine has a boat out at the Detroit Yacht Club,
Nice.
and we boated. Big boat, man. Dennis, this is like a 50-footer.
Oh, you're yacht.
Yeah, they
Yacht
sleep on this
territory.
thing. They're like, oh, you guys want to do an overnight trip? And I love the water, but like sleeping in a boat, it's a 2-bedroom, 2-bath or whatever. But we went up to we had lunch in what's that? What's above Grosse Pointe? What is that town called? Anyways, yeah,
St. Clair?
what?
St. Clair?
Yeah, that's where we were at. So
Nice.
all right,
So
let's
what
let's
did you
get
bring
on-
me
let's
on
get
for,
back to trip.
Triple D?
Oh yeah, we went on such a bad tangent. Lululemon. Somebody took a position, and I'm trying to remember who it was. I'm gonna look.
Was
Oh,
it
it's Michael
David-
Burry.
Michael Burry?
Burry.
Yep.
Yeah. So we've claimed now. People were asking, especially in the STN room, we're trading the 13Fs. They're like, okay, well, Buffett. Who else is important?
nobody.
Not that many, but I'm going to say Michael Burry is now
Moving
important because he doesn't do much, and he's all convicted and all in. We know previous 13F, he sold every one of his stocks that he owned and bought Estee Lauder, and that was it. And it was a fabulous call because Estee Lauder had a fabulous quarter. So, I mean, it was a great call. So I think people are taking note. Burry bought 3 more stocks. He did sell some of his Estee Lauder, but he bought Lululemon, UNH, along with Buffett, and REGN. All those stocks had great days on Friday. All of those stocks continue to go higher here this morning. So the UNH, if you thought the bounce was over, nope, not so fast. The party continues here. UNH is up another 7 points here this morning. There was a couple analysts chiming in here. B of A raised the price target to $325. I think there was another analyst too. Kind of jumping on the bandwagon here. So the Buffett bandwagon. But Burry and Buffett moving, the UNH. Joel, give us technicals here on this one as we do come into a bit of resistance from July.
Yeah, well, if you're waiting for the gap and go, forget about it, at least for now, until you get some kind of news on whatever the FDA's get or who's investigating, the Justice Department. I cannot give you any identifiable resistance until the last high on a gap down day, and that was 342. Do I think it's going to 342 in a heartbeat? No, but gap and go off Warren might have another gap and go today. How high did you get? Well, let's see. Let's see if you stay above Friday's high at 310.30 and the close at 304. If you're looking short term, you might like to see that market 304.01 if you took it home short.
The other position that Burry took that I'm interested in is Lululemon, because I bought Lululemon live in the STN room on Thursday at 194. And I just said, look, I think there's, the potential here that the bottom might be in. I told I was going to stop out under the low of the move because I see that little triple bottom around 185 that we just put in the last 3 days of August. And then the value market, it's all about here it is. When you're trying to call bottoms or turning trades, you got to understand and identify what's the overall theme here. What's happening? Are we still all Momo? Are we still all, AI and that's it? No, that kind of turned. It's kind of changed here in the last week. So now the environment is better for these beaten up names. The value name coming back, and maybe it's Warren that ignited it. It was kind of going before Warren a little bit. But I mean, one, you always start kind of a top-down approach. Are we in a market environment where these trades are going to work? When we were all rah AI and selling all the value names, absolutely not. But it has turned. You cannot, deny that value names picked up the slack in the last couple of weeks. And Lulu has went from a growth name to a value name. It was like at one times 40 times earnings. It's not anymore because the earnings have come up and the share price has come substantially down. And if you go and look at the Lulu PE, it is now 13 times forward earnings. Yes, that's right, 13 times. Does that mean, it's just safe to come in and buy value names? There's lots of retail stocks that go and die with PEs of 12 and 13. But right now, we've got drug stocks picking up with the lower PEs. You've seen some other companies, solar starting to pick it up with its lower PEs because, the credits are going to still be there, it looks like. And now you're seeing companies like Lululemon starting to show a little bit of life. So I think there's the potential to say that, we know nothing for certain, never. None of us have a crystal ball. But we've got the potential that 185 might be the bottom. And if it is, there's a lot of room here. I mean, the stock has been really killed. So if the value rally continues, it's good. Now, the value rally rug has been pulled before. We're not saying it's going to continue. We just know at this time, and even this morning, we're seeing value names doing pretty well. So that's why I took the position in Lululemon.
Okay, so this is in the longer term, right? You took a longer term
in the long-term account with the stop, and I said it in the chat under 185. It makes new lows on the move. And I always say when stocks make a new 52-week low, you got to go. Well, not doing that right now, so we're okay at this point in time. Trying to catch that bottom is where people get into trouble. They're like, oh, it's so cheap, it's not going to go lower. Well, they said that at 250, at 240, at 230, 220, 210, 200, 189. Same thing with UNH. People are jumping in there and saying, oh, look at this thing. At $400, it's a no-brainer. At $300, a real no-brainer. Well, the thing goes down to 234. It looks like it has turned the Warren Buffett bottom, whatever you want to call it, and maybe has turned it. But I think that's the thing that most people do very wrong is try to be the hero. I do it myself sometimes too, and just say, look, it's so cheap, it just can't go lower, and they do. So wait till momentum is on your side. We're starting to see momentum get on our side behind some of these value names.
So this is a longer term trade. So I'm going to give you longer term technicals. It's not green on the month yet. Actually, it is green on the month right now. So we coming near the end of the month. I'd love to see this thing have a green month above 20053 and give me a green candle after two ugly red candles. And right now, I'm not going to throw out any daily levels or weekly or monthly. I'm just going to say, hey, why not go to the 50-day moving average? You got the momentum, 226.55. So there's the technical breakdown on Lululemon.
Okay, lots of earnings coming this week, which we're going to get to here in a second. We're just finishing up our news over the weekend. We did have a meeting with, obviously, Putin and Donald Trump. Some progress being made, apparently, here because we've got the Ukrainian President Zelensky meeting in D.C. today. So where that goes from here, is to be determined. Is there going to be a deal? Is there not going to be a deal? They're close to a deal. We hope they're getting closer to a deal. We don't know. I don't think there's one imminent here, even though Trump is tweeting out. It sounds like there's some good news eventually coming here. But that's the macro picture here today, which could be a market mover later today. So keep an eye on that. Earnings, though.
Hey, Dennis, just real quick, just commenting on the Zelensky, Putin, and European. I saw the news. I posted in the STN room last night that I thought we were going to have a higher open. Like rah, the war's over, and we did get that. And we were substantially higher at 20 handles higher, and then we faded. I didn't really see anything in particular to instigate the fade, but we gave it back. The initial euphoria from that is gone. Who knows what's going to happen and what? I mean, I guess Zelensky, there's a low bar because if he doesn't get kicked out of the Oval Office, it will be progress.
But that. I'd be scared coming back over after that. But I think it's going to be different this time. I think the tone's going to be different. I hope it's going to be different.
Okay, me too.
Okay. So moving back to the earnings parade here, which definitely continues this week. It's retail earnings season. This is the big retail week. But before we get into retail earnings season, we're going to get one more huge tech stock reporting, and that is indeed Palo Alto Networks. Those who took it over the weekend being rewarded because the stock is trading up with the S&P trading down. PANW reports tonight, Joel. Just give us the technicals. I'm going to just give us the expected move.
I already have it. I'm one step ahead of you.
Oh, you are
It's
fast.
14 based on on Friday's prices.
Okay.
Someone gave it a vote of confidence on Friday. I can't remember who or earlier.
I can go look.
Yeah.
There was 2 upgrades last week. We're going to go look last week. It was a double vote of confidence. We had Cantor on Friday just reiterating their overweight. Also, we had Rosenblatt. They lowered their price target, but they reiterate their buy. It was Deutsche Bank on Wednesday that actually upgraded the stock to buy. And then if we go before that, Piper Sandler on Tuesday upgraded to buy. So you got some buy the dippers coming here in Palo Alto Networks. One issue is we're a little bit more of a value trade than a growth trade, and Palo Alto Networks, unfortunately, is not a value stock. It is trading 101 times earnings, but 48 times forward earnings, which is what we usually look at on this show, is the forward basis. I know people say, oh, yeah, we don't know those earnings for sure. We don't know anything for sure, but we know we're always looking at trailing earnings. We would have never bought NVIDIA when it was trading 24 times forward earnings, which proved to be actually light. So 48 times forward earnings for Palo Alto Networks is definitely not a value stock. So it's not its best environment here, because as much as we were giving the value stocks the love, stocks like Palantir had a rough Friday. Stocks with the nosebleed PEs are down here again today. Palantir down here again today. So we got to kind of say there is some definite rotation from nosebleed Momo names to beaten down value names. Palo Alto Networks unfortunately kind of falls into the more Momo camp. So that keeps me maybe a little bit cautious going into this report.
I'll just say the expected move. You can use those levels. We'll see how it trades today. I mean, you had an inside day, and now you're trading up near Thursday's high. So if you're looking more on the upside, I think you need to get up and hold that high. Stay 177 bid. And I think you might see some if you get down to that low at 173.50, you'd pair of lows there. So that's just short term. We'll see how the earnings move. I am still not able to figure out the deal and that they did. And to me, if anything, is like they know they need growth. They know they need something to sustain. I mean, at this PE. So that deal, it didn't get accepted. I mean, they hit the stock off the deal. Let's see if it recovers. I don't know all the synergies, but
I'm
let's see
sure
what
there's some
happens.
synergies. It's the premiums that they worry about. And we're talking the CyberArk
Okay.
deal with CYBR, which obviously is trading off of this as well. Yeah.
Okay.
Also reporting, moving over to Tuesday, which is where retail earnings season starts, is Home Depot. So we're going to get Home Depot reporting on Tuesday. You know what? You could say Home Depot's a value stock, but it's not really here. You could say it's a growth stock, but it's not really here. It kind of falls in the middle here. PE on HD, and I know we're doing some PE analysis here this morning, but it's important. It's 26 times forward earnings, which is fairly expensive for a retail stock. With that being said, it's always carried a higher PE, much like Costco, so I'm not fully scared here. But it has run into the report here a little bit too here. So I think the setup isn't great for this one either. It reports tomorrow morning, I believe.
Higher price stock, bigger expected move, over $16. But we'll go short term again here. Someone's trying to wiggle out at the 403 area. So if you get up there, be cognizant that it was 2 daily highs. And made a low of 95.43 on Friday. I'm not seeing excellent support in that until 389. So murky technicals for Home Depot headed into the report.
We'll fly through these. Toll Brothers, MDT, Viking, not Viking Holdings, the cruise ship line, VIK, going to report Tuesday. Wednesday, big names in retail: Target, Lowe's, Williams-Sonoma, TJX, Estee Slaughter, which we can't even call it anymore. It's back to Estee Lauder, Joe, because it's had such a nice rebound off of Bury. Zim Integrated Shipping Services also reports here too. Target's probably the headliner. It's the one that a lot of people want to know about. It's been the hated stock for a long time. One thing it's got going is a low PE, though. So I just wonder if maybe the setup for Target into Wednesday isn't that bad, because one, expectations are fairly low. It's been the odd man out for a bit. But when you look at multiples here, and it matters right now, this market is looking at earnings multiples again. So it absolutely matters. You look at Walmart trading at 38 times forward earnings, which is almost as expensive as it was in the tech bubble burst when it got up to like 48 times earnings, but which is crazy in my opinion to pay 38 times for Walmart, but some people do it. Costco's always had the higher PE, 48 times, and they have Target sitting down there at 14 times, 11 times current earnings, so they think the earnings are actually going to go down. And, not much people expecting much from it. Is this Target's moment to prove the doubters? Question mark to Mr. Elconin.
Yeah, well, first of all, if I was the CEO of Target, I know exactly what I would do. I know things didn't work out too well in Canada, right? With Target, right?
No, yes, no.
The past 2 summers, Lisa and I have hosted overseas teenagers for a couple days. And all 6 of them had one request when they came here. You know what it was?
No.
Well, what subject are we on right now? Target. They wanted to go to Target.
Really?
Yes. They want to go to the Target.
Weird thing to want to go to.
They want to go. Well, they also want to go to the mall. They want to go to Crumble Cookies, which I have never heard of. So and they just love it. And they go and they looked at the cosmetics. They were young ladies. So my idea for them, and I will buy the stock, is when they open up smaller stores overseas. I think they need to do it. I don't know what the flavor is for U.S. stocks or, over there now, or U.S. companies, but that's what they need to do. Technically, the stock needs to hang in here at the 50-day. It's been hugging it for a while. If it can get away from this 50-day and start to establish a bid, then maybe this disaster that started in late 2021 may be coming to an end. But I'd like to see it hold the 50-day. Wow, get away from it. Right now it's 103.02. I'd like to see an established bid. Expected move 9.30 for Target.
You're talking $9.30? Are
Yep.
you're not talking percentage, right?
I talk points. I don't talk percentages.
Exactly. That's what I like too. Target 9 points. It's going to be interesting. Then you get Walmart on Thursday, which has a completely different setup than Target because, like we just said, the higher PE expectations much higher for Walmart. I think it actually sets up good for Target long, Walmart short. But, that's because the momentum trade would go the opposite. But the momentum trade's broken a little bit here, folks. So, obviously things are going to change for Wednesday and Thursday. But let's see what happens. It's going to be interesting. Give us some quick technicals on Walmart, which is going to report Thursday morning, one day after Target.
I saw a great commercial for Target for back to school stuff. And so it was just and I hate commercials. Walmart, wow, filled the gap, made a new all-time high. Not sure what the expected move is, but man, 104 looks like major resistance to me. And coming back on the downside, I don't see any multiple lows in the same area until 97.25.
Workday too, Joel. I was going to be silent for it, but they report Thursday. CRM and Workday have had a hellish time here. In obviously the huge up moves in tech stocks in May, June, July, CRM has not participated at all. Workday, the old CRM, basically spin off because a lot of people over there from Salesforce, they're very tied to those two companies together. I pair trade them as well. Are down near their 52-week lows too. And I was saying, if your stock is sitting down near its low of April, it's probably not a very good stock. But right now, in the last 3 or 4 days, I'm repeating myself a lot this show, folks, if you've noticed. In the last few days, the stocks that the laggard trade is starting to show life. And look at Workday. Just bang. August, this stock's dead. 206. Boom. 20 points up in 3 days. Salesforce.com, same story. You're like, well, wait, because tech stocks started going down the last couple of days. These are laggard tech stocks. So they are trading with the laggards. And the laggards is the value trade as well. Not saying CRM and Workday are value, but they are definitely laggards. And they are showing a little bit of life here. I think it's, not a coincidence here that these stocks start to show life when all of a sudden, this market's interested in non-Momo names. CRM, Workday have not been Momo names. They've had pretty crappy years, pretty crappy last 3 months. Is the time for the turn here for Workday, Joel?
I can't do my joke anymore. You permanently ruined
know, I
me doing
ruined
that
it.
joke.
You just say
I,
nothing, and I'm like, Joel, your mic's not working. He's like, no, it's work day.
I know. So I gotta find a new bag of tricks here. If the laggard trade's picking up, this momentum's going to continue. Let's see how the earnings report. This has really been a laggard. You can't argue that maybe a major low is in here if they come in with a good earnings report. That 206.77 looks pretty good. And look it up. I don't see above the 50-day. I mean, the 240. Look at all that congestion, highs and lows and closes. So I'm going on the expected move. That was one I didn't do. Boy, it looks like you could find a wall of others at 240. Dennis, quick question here from the chat, and they're asking, in a value market, what indicators you're looking at other than the VIX. And neither you or I are big VIX fans, but besides the
you don't need the VIX. If you're a full-time trader and you're using the VIX, you don't need it. You don't know what's moving. You don't know the risk is elevated. You don't know volatility is up. Maybe if I was away for a month and coming back to the markets, I'd need to look at the VIX to kind of get a feel for where we are. But when you're in the grind every day, and I'm not only in the grind, day, I'm in the grind at night, I'm in the grind in the morning, I'm in the grind Sunday night, I'm in the grind all the time. So when you're trading in the markets this much, you absolutely don't need to look at the VIX. It's a lagging indicator. It will tell you when the risk is elevated after the risk has already happened. So you don't need VIX, and you don't look at that for value names. What you want to look at is just value stocks. Have a grouping. You can group them. Take all your Ps. Go do a FinViz scan. Ps, low Ps, bang. Then do a high Ps, bang. Group them, like that. Momo names, non-Momo names, laggards, leaders, like that. Group them. You can see in the last week, we're starting to see those value names start to pick up. If you want to use Burke.B as a value indicator, you can. The one issue with using Burke.B, it was always the best value indicator. The one issue with that, though, right now is because it's got the lagging performance because Warren is leaving. So you kind of got to ignore the whole May, June, where it's just basically, some value stocks were going up in May and June. Didn't matter to Burke because everybody's selling because, hey, we don't know what they're going to do without Warren. Last little bit, it's kind of picked it up. But we kind of lost the Warren premium, and now it's starting to trade again. And you can see value names starting to pick it up. But, just look, group your stocks. That's the best indication. Stock price is always a better indicator than looking at all of these technical indicators that are derived from, different, things.
You could throw drug stocks in there as well. Some of your drug stocks.
Sure. Those are all values.
Yeah. Utility stocks,
Utilities are different. So utilities are not necessarily value stocks. They are defensive stocks. So staples and utilities are kind of their own group. They will fall into a little, but they're not really value stocks. Like if you go look at the multiples on like Coca-Cola, it's not a super cheap stock. It's 23 times forward earnings. I would not say Coke is a value stock. They are staples. So utilities and staples kind of trade together, and they trade off interest rates because they have higher dividends. So as interest rates are projected to go lower coming up, usually it's a better environment for them. So, but then sometimes if the market has risk, then money just flies into them. Drugs can also play defensive, but drugs right now are value names too because they're so beat up. I mean, there's nothing cheaper than the drug stocks. You go, and we've been talking about this. Merck is trading 9 times forward. 9, not 10. 9. It's crazy. 9 times. Pfizer, which has been really beat up, is 8 times earnings. Bristol Myers is 7 times forward earnings. These are the multiples, folks. These are the forward multiples. They are freaking low. Like these stocks are absolutely dirt cheap. And if you go look at the performance in the last 2 weeks, these stocks are starting to do pretty good. Bristol Myers, 43 to 48. Pfizer, which has been dead money for a long time, 23 to 25. It's not a bad move. It's a 10% up move in 10 days for Pfizer, which is a dog of dogs. Merck, moving up from 78 to 84. Is there more gas in the tank? Does the value rally continue? That story is still to be determined. But right now we can say value stocks are back in vogue.
Martin, good morning, Martin Contreras, a member of the STN room. First Solar.
Value name, 100%. And it's a good segue into First Solar because UBS has a huge note out on solar here this morning. They're talking about all these solar names. They're talking about, and I'll jump into it here right now. But just before we jump into it, actually, so First Solar, 8:30. Do we get a number? We're moving. Maybe not.
Dennis, man, except when just me speaking at Jackson Hole on Thursday and Friday.
I know we do Jackson Hole. So it's a lighter.
No,
It's a light week for
no
economic data.
econ number at 8:30 that just hit.
Just making sure.
Cool.
First Solar PE is 17. Forward PE is 13. Let's think about this for a second. I have First Solar in the long-term account. People are paying like a bazillion times for these nuclear names. They're like, oh, it's all nuclear. I've been saying solar is the sneaky AI play, the cheap AI play. Now, again, if the credits go away, then it becomes interesting here. But right now, it looks like these credits aren't going to be as bad. According to UBS, who picks First Solar their top pick, IRS notice is a positive. On August 15th, the IRS released its initial guidance as directed under the Trump EO. The IRS guidance broadly maintained 2030 tax credit eligibility with only modest qualification changes here. We detail the IRS guidance later in the report, But if you just go into it, because obviously everybody's expecting these solar credits to immediately go away, is not happening here. It doesn't look like now. Now people are like, oh, crap. This is actually maybe an AI play. So you got UBS farther in the note. Demand for U.S. utility scale solar projects is outstripping supply due to electricity consumption growth at AI data centers built by technology companies with 100% renewable clean energy targets. This provides potential upside to volume growth and increased certainty of demand for the U.S. solar industry in our view. U.S. hardware suppliers are well positioned given their domestic tax credit support and tariff protection. Our top pick is First Solar. We expect First Solar's EPS to grow from $12 2024 up to $32 2027 before accounting for further capital redeployment. So UBS is thinking that earnings at First Solar can be $32 by 2027. That would give it a cool PE of what? 6 on a 2027. This stock is absolutely dirt cheap. If the credits don't go away, it's an F. Maybe Trump changes his mind, say, nah, we're crashing. He just changes his mind overnight. Just like wakes up, has a dream and just changes. So things can change. Nothing is permanent with this administration here. But at this moment in time, with the information we currently have, solar is starting to be thought of as an AI play, which I said a long time ago when I bought First Solar and made the pitch at $145. I said at a certain point in time here, I don't know when that is, they're going to realize that solar is an AI play as well. The street is starting to take note here, and these stocks are a hell of a lot cheaper than those nuclear stocks.
This is nice move. Coming back halfway the move with one of my favorite chart setups, lower right chart, big move. And this is kind of deja vu all over again, because remember the analyst bandwagon here? If you guys want to go dig through your notes here in 24, this rally was all just about the analyst bandwagon, got head over heels, came back. Let's see what happens. This 211 area, that's halfway back. Also, you got a monthly high at 212. So important area coming up. It's been a big run. Green monthly candles for solar on the move. And then just quickly, let's cover the other solar ones. Didn't Sunrun have a big move?
Well, Sunrun actually has a rating here this morning, Joel. RBC is upgrading Sunrun here. If we're jumping into this before our analyst, it's a little bit off schedule, but that's okay. I go find the note for you here too. First Solar, RBC upgrading Sunrun to outperform. They're raising their price target up to $16. The upgrade run with PT of 16. Believe multiple re-rate is warranted given greater certainty on the long-term opportunity following Treasury guidance clarifications. Talking the same thing. OB3 guidance changes have positive implications for Run's business model and clarity. Blah blah blah. New price target is $16. So, which isn't that far away from the $14.54, but. In any regard, Sunrun had a huge day on Friday. It is tacking on more here as analysts chase price here this morning. The solar rally is starting to catch steam.
Okay, just real quick, continuing higher in the pre-market. Let's take a look at the, you take a look at the pre-market high. Not much on the monthlies here. Maybe some room up to just over 20. So there's some. What about ENPH? Is anyone loving ENPH?
Well, and you can just go the tan if you just want to go them all. But you know what? ENPH fits the description of a laggard trade. Solar starting to show love. I don't have ENPH, but I think this is a good idea here, Joel, at this point in time. I think you could almost set up a trade where again, it'd been nice to do this on Friday when the stock was 32. Now the stock is 36. So I mean, if you get a little pullback, let's say you can get it back in the 34, 35 area, stop yourself under 30. But this one has been the laggard, the dog of the group. Now laggards are back in vogue. So right now that is okay, but longer term, it's always best to buy the leaders, not the laggards. And ENPH has been an epic disaster. Here was $140 at this time last year. It's $35. So I mean, and SEDG is the other one, but it's come back quite a bit farther than ENPH, off the lows here. So again, these stocks, we were worried that, hey, are these stocks even going to, be able to survive, especially if the credits go away? That's still to be determined, but right now people are looking at these as potential AI plays all of a sudden, which makes them back in style.
All right, we'll see if the rotation continues. 8:35, and we got a new old guest to bring on the show. Tom Bolley, how you doing today? Chief Market Strategist over at earningscalendar.com. I just wrote it down. Earnings Beats.
There we go.
How did I mess that up? I'm going to contribute at stockcharts.com. How you doing, Tom? I like that background there. Is that real?
It is real. I'm actually traveling. I was away this weekend for a golf tournament. So I'm coming back through the Shenandoah Valley. It's absolutely beautiful.
Yeah, it sure looks like it. Well, thanks for joining us. I really appreciate it here. So let's just give a yearly perspective here on the markets. I know that you like to look at things a little bit longer term. We've had some different cycles so far this year. So let's give us a top-down yearly perspective.
Yeah, well, we opened the year. I was a little bit nervous, started seeing some warning signs back at the beginning of the year. So I was actually looking for a correction. I thought by the end of the year, we'd be back at all-time highs. I actually have a target that I've left unchanged at 7,000 since the beginning of the year. But I really thought in the first quarter that we had a challenging market. I told our members back at the end of January that I was moving to 100% cash. I just saw a lot of signs, and there was a lot of things for the media to kind of grab hold of and run with as far as the tariffs and the inflation and what the Fed was going to do. And so as a result of all that, I just thought it was time to be cautious going into the first quarter. But I think things have changed. We saw at the end of the end of the first week of April, a lot of money rotating back into growth. And I think really that's characterized most of the action since then, is that money has continued to pour into growth stocks, which I think bodes really well for the second half the rest of the second half of the year. I just think historically we've got a little bit of a problem here late August and possibly September. Fed sheet.
Yeah, let's talk about that. The half calendar quarter is how you like to characterize it. Talk about that cycle and how you're approaching the markets.
Well, it's really interesting. I've studied history back to 1950 on the S&P 500. So I've got a lot of different periods and, bullish periods, bearish periods I like to follow, and at least be aware of. And what's interesting in the stock market is if you go back and you look, the performance of stocks in the first half of calendar quarters. So January 1st, February 15th, April 1st to May 15th, and so on, tend to perform much, much stronger than the second half of calendar quarters once we get through the majority of earnings season. So if you just think of it in terms of earnings, the market normally runs up with the anticipation of strong earnings. And then as those earnings are coming out, we tend to see a continuation of moves. That's the overall tendency of the market. It doesn't happen every quarter, but that's the tendency. And then when you get past earnings season, kind of where we sit right now, I mean, today's the first trading day of the second half of calendar 3. And this is the worst half calendar quarter of the year, from August 16th to September 30th. Since 1950, we have an annualized return of about minus 5%. Wow. And that covers almost 10 years worth of trading days. So, you think of it, well, it's just a month and a half. But if you think, you go back 75 years, if I told you that for the next 10 years, we were looking at, minus 5% a year, you wouldn't be very excited about the market. But that's really what we face here over the next 45 days. So I'm a little bit cautious because of that, but I don't really have any other signals that are pointing me toward really bearish action. So I think we just consolidate over the next 45 days, and I think we're going to have a strong fourth quarter ahead.
Tom, what do you think is attributed to that? Why so much weakness August and September? Is it like, one, maybe people are like, August is a slower month, like volumes are down, but then, maybe people are on vacation, maybe the market's leaked down. But why, when they come in September with their selling shoes on sometimes? Like, we do see it, and maybe it's like their perception. But we've had some pretty bad, Septembers and Octobers before here. Why do you think that is, that this is, a seasonally weak period?
I mean, it's a great question. I think you probably nailed it. I just think it's a light volume period. I think prices maybe get manipulated a little bit more because of that.
Right.
I think too, at least for the last 10 years, 12 years through this secular bull market that we've been in, the best period of the year, a lot of folks say go away in May, but actually that's the worst thing to have done in the last 10 years, because May, June, and July have been absolutely crushing it.
Yeah.
So I think part of it, at least more recently, has been just, a period of profit taking, get through all these great earnings reports. And I think the other thing is, I think a lot of dirty laundry might come out as you get closer to the end of the year. I think if companies have bad news in the fourth quarter, they kind of kick the can down the road and say, well, the rest of the year is going to be strong. Next quarter is going to be good. I think by the time you get into the end of the third quarter, there's no more can kicking at that point. I think you got to come out with that dirty laundry if you have it for the quarter.
What do you think about this market this year, where we've had so much rotation, where I've been talking about, that's been like the tech trade, the momentum stocks, and we've seen this ridiculously hot rally here since April, where we've got certain names that are up 100, 150% in 3-month periods here. And then you have other names that are just not participating whatsoever. Last week or so, we're starting to see some value names show a little bit of life. Maybe a little bit of rotation back in. But is this just all still about the AI trade? Like, is the market going to continue to go to those names where they've made the money here? Or is there room for the value trade to actually come around here and start to take some of that capital that's been just allocated to these same names that we hear about in the media all the time?
Yeah, that's another great question. And we restock our portfolios every 90 days, and we've got one coming up. So I'm actually giving this a lot of thought right now, as far as how much do we want to be invested in the high growth areas versus some of these value stocks that are finally starting to see a little bit of strength. I honestly think that both areas are going to do well. I think money's going to rotate somewhat away from growth. I think some of it's going to depend on what Fed Chief Powell has to say from Jackson Hole this Friday.
Right.
He took the market down 3 years ago, if you recall, when he talked about more pain ahead. The market was bouncing off that cyclical bear market bottom in June, and I think the S&P had gone up 700 points right before Fed Chief Powell talked about more pain ahead, and then we took another big drop. And actually, in I think October of 2022, went down and took out that low that we had seen back in June from that year. So I don't trust the Fed. I think they've been wrong a lot more than they've been right. I think they eventually get it, but I think they're just late to the party. And so I'm a little nervous going into this, because I think if Fed Chief Powell says something this week about how they need to stick to their guns, we just had that really hot PPI report. Didn't see much in the way of the CPI, but the PPI was really hot. And so I'm a little nervous, because I think the Fed's got this track record of being late. I actually love the value stocks. I love a lot of small cap stocks. The home construction area has been moving in anticipation of lower rates. I think regional banks will do extremely well when the Fed actually does start cutting rates again. So I think there's some areas that have been beaten up on a relative basis the last few years that I really like. I talked about small caps earlier this year, and I think they're going to be small caps that you're going to see go up 3, 4, 5 times when the rates start to get cut. I mean, I'm already seeing it in some of the small caps, but I think it's going to be a big rotation into small caps, probably in the fourth quarter of this year, maybe sooner.
Can you discuss some of those small caps? I mean, because it's been a wild ride for the IWM when you're drilling down. Definitely need lower rates. Do you have particular small caps that you're keeping an eye on?
Yeah, there was one Comscope, COMM, but they just made a huge jump. Amphenol, APH. just agreed, I think, to put $12 billion into the company. And so the stock, I think a week or two ago, jumped from like $8 to $15.
Yeah.
But that was actually the number one small cap stock that I had provided to our members back in June.
Great
so
pick.
I had a list of 25, and that was one. And I'm looking right now to see if I can get you a couple of the others. So CommScope was number one. I really like a smaller software stock, Magnite. They do some stuff with Netflix.
Symbol?
Magnite,
Could you give me the symbol?
MGNI.
yeah, MGNI. I think this one's just consolidating after a big run. This used to be a $60, $65 stock. I wouldn't be surprised over the next 6 to 12 months to see at least a double, maybe a triple on this one. They just came out with their earnings not that long ago. They came in well ahead of estimates. So they got a lot of momentum going there. And again, I think it's the rotation more so than their profitability. I think the profitability will be there. I'm just looking at, big rotation. If a lot of dollars start moving away from that AI trade and some of the other high growth areas and starts moving into some of these small caps, they really have the potential. If you go back and you look, when rates took that big drop back in 2020 with the pandemic, that was the last time we saw a huge run in small caps. And they jumped from what I recall, maybe about 130% in a year. And I think with rates coming down, I think we could see something similar, maybe not quite to that extent, but I think we're going to have a big run up in small caps.
Going to the regional banks, a lot of them have had a pretty nice run here, but you're looking when rates eventually do come down. Any regional banks, maybe some that haven't had as major run, or are you just going to stick with the strong ones?
Well, I mean, for the most part, when I get a group that I really like, sometimes I'll just go with the ETF. I really like the KRE, which is the regional banking ETF. That one has started to move a little bit. I think it's in a nice channel. If you connect the highs and the lows off that April low, I think we got a nice channel going there. I expect another breakout in the KRE. One stock that I kind of like in that space a little bit is East West Bancorp, EWBC. That one made a run, got up close to its 52-week high, pulled back a little bit to the 50-day moving average, and now is just starting to bounce a little bit off of that. So that's one name I would give you that I like to follow the accumulation distribution line, and this is one that seems to be under a lot of accumulation. So I like it for that reason.
Okay, there's a look at some regional banks, and then one more area we'd like to cover with you, transports.
Yeah, the airlines really got hot last week, and that's not a group that I like a lot long-term because they tend to just kind of go up and then fizzle, come back down. But short-term, you can see on that chart, nice little breakout there. So UAL, probably one of my favorites right now in that space. I think that's an opportunity to go a little bit higher on that one, just more of a shorter-term kind of a trade as long as the group remains hot. One leader that I like in railroads have yet to really catch much strength, but one railroad I really like is CSX. It's been showing a lot of relative strength among the railroads, and I think if money starts to rotate into that group, I really like CSX to go higher. And some of these stocks, like CSX and some of the other railroads are good dividend payers, and I think a lower interest rate environment is going to help that area as well, maybe attract some buyers looking for income.
All right. I'm glad none of those cars on the road got too close to you. You look like you're sitting like right on the road here. Tom Bolley, Chief Market Strategist at earningsbeat.com. Also a contributor at stockcharts.com. Tom, great having you. I like your technical, your fundamental look at the markets. And you're going to be back on again soon, I have a feeling. Thank you.
I'd love to come back. Yeah. It's a pleasure being with you guys. Really appreciate it.
Thanks, Tom.
Quiet. We're not moving much here.
Yeah. Now
very
officially
quiet.
in the dog days of August. Traders have taken vacations. I would expect volumes to come down significantly here in the next week or two if they haven't already come down already.
Take a look.
I think there is some opportunities here still. I think identifying the rotation, there's going to be some stories. There's going to be stuff going on here still. But overall, this is a quiet period for the market. And, I've always, had lower expectations of August. You make a little bit of money. It's good. But, really the money starts pouring back usually in September, October, one way or another. As to Tom's point, sometimes it comes back in with people with their selling shoes on. Early imbalance look here. UNH 435,000 to buy. That's one of the biggest buy imbalances that I've seen. It almost feels at this point now like we've run a long ways. So I mean, yeah, no, I'm saying that it was literally $237 8 trading sessions ago. Now we're 312. I think if you're coming into UNH now, at this point in time, you're a little bit late to the party here. It's this run up. What is that? 230 up 25% here in a week and a half.
Yeah.
It's a big move here now. And it feels like this morning when you got an institution obviously coming in and saying, load the boat here. I kind of feel like a fade trades a little bit here for UNH. Not saying that in the value names overall, because a lot of them haven't participated as much here yet. But I feel like, chasing UNH at this point in time, people are buying it up another 8 points here this morning. Wouldn't surprise me if we get a little bit of a breather here for UNH.
Dennis, did they have a projected opening on that right now?
$325. Now, again, I don't think it's going to open that high because sellers will come in like myself. I will come in and try to short it, actually, if it wants to open that high off the bat. But lots to consider here. Other imbalance looks here. Kohl's is one. The value trades back here too. I mean, Kohl's has been starting to show some life. Short squeezy name KSS. It's got 50,000 to buy here this morning. Also going back into the drugs, just giving you a quick little look here. They're pretty small, the imbalances. Disney's 49,000 to sell, and then back to the drugs. Pfizer, Bristol Myers 69,000 to sell, 30,000 to sell. But the one that stands out like a sore thumb here this morning is definitely UNH up 454,000. Another stock to talk about though, just quickly. CVS has 36,000 to sell. CVS actually has got an upgrade this morning from UBS here, so it's trading up. So CVS, maybe it'll be a pair trade here where you get along with CVS short UNH, something like that. Maybe off the bat. Maybe we'll do one in the STN room. We'll have to see.
Boy, oh boy. And just the projected prices there, they saw as still, 40 minutes to the open, orders will come in. But man, if you took a shot on some weekly calls or something on this UNH, you're not losing much time value today. Of course, we'll see where it opens, but that's a big. I would be, if I was on a trading desk and someone came up to me and said, "Yeah, we want to buy 435,000 on the open," I'd be like, "Really? Wouldn't you rather just kind of not sure
you're going to talk them out of it?" These are executing brokers. They just take the orders and they drool a little bit. It was like, yeah, we're going to get this one. We're going to make this.
I would be like, I'd say, no, I'm going to call Kenny Glick and have him buy it for you today on the 1 minute VWAP or something like that.
Kenny would be looking at the VWAP on this and pulling back. Kenny's a buy the dip. I mean, VWAP is really just a buy the dip strategy there in itself. And that's why Kenny's one of the best. Buy the dip seems to always work. But right now, if you're buying UNH this morning, it's called buying the rip. People think they're buying the dip this morning. They're not. You're buying the rip. Sorry, folks. It actually has already run 22% since the lows. So
Guy wants to know.
You're buying the rip.
Guy wants to know where the best place to see these orders and trade imbalances.
Well, there's multiple places. It depends on your broker. Interactive Brokers has them. I've got them through Ready. It's a floor feed. It's the NYSE imbalance floor feed, and then the Nasdaq imbalances come out at 925. I subscribe to that as well. Nasdaq Total View will get you that. Again, though, if you had some retail brokerage, discount brokerage, they probably don't have this information. Well, when you're literally trading for free trading, you don't get any of the bells and whistles. You're getting you're not paying commissions. You shouldn't expect to get all this other information. These feeds cost money. What was the imbalance feed cost of brokerage a year? It's crazy. Let's go look. NYSE imbalance feed cost. I think it's $60 or something on some of these to subscribe to it. But if you go, so for a brokerage to get it, it's $7,500 a month. So I mean, this is just extra expensive. $7,500 a month for this feed. NYSE integrated. That's usually done on the brokerage side. So I mean, if you've got free trading, you better have some customers to get that. But do they just want to go pay, an extra $7,500, extra $100,000 a year to do it? With Robinhood, probably not. Are there customers asking for it? 99% of the customers don't know if it exists. So why even bother? So I mean, that's where you've got to consider, and that's it depends. The thing is they've tiered pricing too. It'd be different. If you're bigger, then it could be different as well. So more targeted imbalance fees can be $2,500 a month, a real time $7,500 a month. I'm just looking right from the website right now. So the stuff's not cheap, folks. The stuff's not cheap. Now, again, most of the full service brokerage actually include this. So when you're paying commission, some of their commissions go towards this stuff. But if you're trading for free at all these free brokerages, you're not going to get this information because they got to watch their expenses. They're not charging a commission. Commissions do go to something.
Okay. All right. We're moving up here the last 5 minutes, and we had a mover on Friday night. Dennis doesn't remember it because of his goldfish memory. But we got some news on Tonix Pharmaceuticals. I got the symbol right here. Brent, do you want to pronounce fibromyalgia? Some good news on that. And that stock exploded when we were covered in the STN. Friday night, it went to 72.60.
Wow.
Yes.
After selling off the day before. So it went up back to $72.
It went above.
Point that out on the chart, Joel. Like if you look at this left chart, I mean, we got to start.
I don't know how to get this line.
Well, you can see you're not on that line. I can point. You can see the line up here. That's where you're looking. That little line right there. That little wick. $72. So it went all the way back up there.
72.60, Dennis.
Yeah.
72.60, and you know what? I 500,000 shares traded.
Yeah, some people lost some money there.
Yeah.
Chasing. Don't chase.
Oh man,
don't chase. Write it down. Stop the show. Get your sticky pad out. Don't chase. DON''TCHASE. Don't chase. Circle it. If you're new to trading, put that on. Because I tell you, and I've told these stories before, I've worked in trading rooms and stuff. People chase price. They always do. It works sometimes, but most of the time it doesn't. I'm going to say it again. If you are buying UNH this morning, not saying it can't go higher, it can continue, but you are chasing. People think they're coming in this morning and like UNH, Buffett's in this now, and I'm getting a deal. No, you're not. It was $234 a week and a half ago. It's $312 now. It's up 80 points. It's up 30%. In 1, 2, 3, 4, 5, 6, 7, 8, 9 days. If you are buying UNH now, you are absolutely buying the rip and doing it backwards. Sorry.
The Bradster just pointed out when I brought the stock up to him, he's like, wait, didn't that have a high 2 days ago at 69.90? I mean,
and gave you another out on Friday night. People chasing Friday night, especially after hours. Chase. That's what they do. Algos chase. That's what everybody does wrong. There's a reason I'm fairly consistent. I don't chase. Now, again, I maybe miss that huge move every once in a while, the home run, because everybody wants to swing for the fences. Nobody wants to sit here and grind it out. They want to swing like Rob Deere at every pitch that goes, and I'm blasting this thing up. But he leads the league in strikeouts. A lot of strikeouts there. You get the odd homer, and it looks pretty good on the highlight reel. But you know what? In the long run, not the way to make money.
You always go to the Rob Deere comments.
Because I love the 90s Tigers, the Cecil Fielder, the lineup. Yeah, I was all about, I love that team. I listened, I was like 14 years old, Joel, and I was in my, before they were on television all the time, and I'd be on the radio, listen to WJR and the Tigers lineup coming up there. Fielder, Mickey Tettleton, Tony Phillips, he's spitting all over the place and moving his bat all around there. Those were the days. I love the old base. I still live in the 90s. It's a problem.
Did I ever tell my Mickey Stanley story?
No.
Do you know who Mickey Stanley is? He was the center fielder. He was the center fielder on the 1968 Tigers.
Yeah.
And we were up north with the kids, and I went golfing, and go to the first tee, and the starter says, here, I'm going to pair you up with, this couple, Mickey Stanley and his wife. And I'm like, wait,
Come on, really?
Yeah. And I'm like, the Mickey Stanley, the Tigers, Mickey Stanley? And he says, yes. And so I played a round of golf with him, and he's a good golfer, but I used to be decent.
You were better, though.
Well, I got a good story, and then we're going to end the show. So 17, I believe it was 17. It was like 175-yard par 3. And like I'm looking at it and everything, and I'm like, you ask people, what are you hitting? And Mickey's like, wow, 175. He goes, I'm gonna have. He said maybe a 6, maybe a 7. And I said, no, wow, I don't know what I'm gonna use here. And so he hit it. I don't know if he got it on the green. And I pulled out my 9-iron. And he said, if you put that on the green, I'll give you $20. And you know what?
Joel, get these stories. You put on the green.
I put it on the green.
Wow.
And Mickey said,
$20.
You know what? I said, forget it, Mickey.
Stanley 20.
I said, forget it. Forget it.
I don't need their money that bad. Keep your 20.
Yeah.
I think he dreams this crap up, folks. I think he honestly has these dreams and he confuses dreams with reality here. He's getting older, you know? Like, give him a break. You know, when you get to be 80 years old, you start confusing dreams.
How can I make a story like that? Who would make a story like that up?
Your
How
dreams.
can I possibly make a story
crap up like this?
Okay.
It's a great story.
I did have him sign the scorecard, but I can't go to that. All right.
He has to say you put it on the wall.
Let's go to Fig.
It's a cool story. Anyway, I don't even know where we started on that tangent. We started with don't chase. Yeah, that's what it was. Don't chase, and swinging at every pitch for home runs.
Yes, and you're man. Look at this. Yeah. You're asking me about Fig here. Wow.
Big Newton.
I have no idea. I mean, it's a new IPO, right? I can't. I'm not sure what to do, but it looks like it's kind of hanging out here near the low of the move after a crazy thing, but maybe just the life cycle. Eric Kroll. Maybe we'll get him on to analyze this, but it's hanging.
This thing's trading 43 times sales. I'll analyze it. It's trading 43 times sales. It's $38 billion market cap still. Kramer had this absolutely right when it was 130 and was throwing Fig Newtons at the screen and saying, sell this thing. Kramer, props Jim Kramer. Great call. The stock goes lower is what I say.
And just speaking of Eric Kroll and my buddy got out of bullish at 91.67. So, but he can't buy it back for 60 days. So that's it. That's it for today on Pre-Market Prep. Great flow. Thanks to Brentster for putting everything together for us. So let's get going. Let's go in and attack this Monday in the Stock Trader Network.